There's no doubting the seriousness of the problems facing the Eurozone. Questions about whether the euro can survive seem to get louder every day. But one piece of research by an economist at JP Morgan Asset Management has taken a quirkier approach, comparing different groups of countries to see which might be the best suited for a single currency by looking at which are the most economically and politically convergent. The research suggests that the strongest candidate for monetary union would be Latin America. A combination of the UK and its English-speaking offshoots, the United States, Canada, Ireland, Australia and New Zealand, would also work pretty well. The countries that used to make up the Soviet Union would do better than the Eurozone, as would a reconstituted Ottoman Empire. Even the random group of all the countries in the world that begin with the letter M would make a more cohesive group than the Euro area. How bizarre. In fact, the Eurozone countries are bottom of the pile. Well, we're joined now by the BBC's business editor, Robert Peston, who tonight, in a BBC Two programme entitled The Great Euro Crash, will be exploring just what's gone wrong. Should it never have happened, Robert Peston? I mean, should those countries have never got together and formed monetary union?
Well, certainly from the standpoint of where we are today, you would have to say that it was a very, very, very foolish decision to go ahead. What one has to do is one has to put oneself into, in a sense, the minds of the two leaders who made the crucial decisions, Helmut Kohl and François Mitterrand, more than 20 years ago now. And broadly, what was on François Mitterrand's mind at the time was that he wanted to use monetary union to curb the growing power of Germany. Germany was on the verge of reunifying, becoming a much more powerful country, economic and politically. France wanted, therefore, to bind them in to the EU in a rather more deeper way. And therefore, in Mitterrand's view, this was always a political project. It was all about effectively creating over time a United States of Europe.
Yes.
Had they been able to create that federation, arguably, actually, there would be much less of a crisis today. The problem that they've got is that they are still run as sovereign states, and therefore, for that reason, Germany in particular is unwilling to provide the kind of financial support to the weaker countries that would allow us to get through this crisis without a complete calamity.
Now,
it is the absence of political union that has led us to this extraordinary mess.
Now, taking what you've just said, with hindsight, as you say, and hindsight's a wonderful thing, you wouldn't have put those sets of countries, the Northern European and Southern European countries, together. But when you look at what the immediate problems are facing the Eurozone now, it's not a currency problem in itself, is it? I mean, it is a banking problem. It is sovereign debt in that sense. That hasn't necessarily, has it just come out of the fact that there was monetary union?
Well, no, you're absolutely right that the borrowing, the fact that Italy, Spain, Ireland, Greece, Portugal all borrowed more than we now regard as sensible or affordable, they did it at exactly the same time that the UK borrowed more than was affordable. The US borrowed more than was affordable. It was an era of cheap interest rates. Actually, for those countries, the interest rates were made even cheaper by monetary union, which is why they borrowed, as I say, recklessly. But it's not the accumulation of the debt, as it were, that is necessarily to be laid at the door of the Eurozone. It is that, unlike the US and the UK, as part of the Eurozone, these countries don't have the tools to fix the job. We're able to get interest rates down to record levels. In both countries, the US and the UK, the central bank has created tons of money to ease the period during which we're trying to get our debt down. Our currencies have fallen in value, which makes life easier for our exporters. None of those adjustment mechanisms are available within the Eurozone. What does it mean? It means that, unfortunately, for Greece, Portugal, Ireland, Spain and Italy, in order to get their debts down, it imposes a massively painful a massively painful sequence of events on the people of those countries.
Yes.
If you can't devalue, what has to happen? The wages of people in those countries has to fall, perhaps by as much as 30%, to make the companies in those countries competitive with Germany's. So what you get within this monetary union, in the absence of Germany helping wiping out these other countries is, frankly, extraordinary misery for the people of the weak countries, and misery that may well go on for years and years.
Well, then, just briefly on that basis, can anything be done to prevent the Eurozone breaking up, or is it inevitable now?
Oh, gosh, I mean, I'm going to lose my job if I answer that question, Joe, as you know. What one has to say is that the tensions pulling the Eurozone apart, the pressures, the forces pulling the Eurozone apart are extraordinarily powerful. And it has to be said that it is very difficult to see how the Eurozone sticks together unless, as I say, to get back to the point I originally made, the Germans are prepared to use more of their wealth to help the other countries.
Okay.
Germany's prepared to bail out these other countries, then I think there is a chance that they get through this. But in the absence of that, it's very difficult to see why the citizens of any of these countries are, over a period, as I say, potentially of years of personal misery, why they would think at the end of the day they want to persevere with this.
Well, that makes your programme essential viewing, of course, for this evening. Remind us when it's on.
9 o'clock tonight, BBC Two, and, you know, I hope that people get some sense of how we got into what is an extraordinary mess.
Thank you very much, Robert Peston. Well, with us now is the Chair of the Treasury Select Committee, Andrew Tyree. Let's just pick up on some of those points. I mean, we've had a fairly comprehensive explanation of the history of it. But in your view, could it have been done differently in the way Robert Peston described that monetary union between those southern and northern European countries to have made it work?
Yes, many of us argued at the start of this project, even before the Eurozone was created, that you needed a mechanism to enable countries that couldn't cope to get out. And there isn't one.
No.
That's the first point. The second point is those countries that joined needed to know that they had to make very tough adjustments if they were going to stay in the Eurozone for the long term. Those adjustments are now coming home all at once, like all the buses all arriving at the bus stop all at once. And the third point to make, which is absolutely crucial, which is not fully understood, is that it's not just a one-off cheque that's going to have to be paid by Germany if this, and the northern tier countries if this area is going to stay together. Year after year after year, the southern tier countries are likely to perform somewhat less well than the northern tier, and therefore further cheques are going to need to be written.
On that basis, then, it sounds as if you feel a Grexit, that rather unfortunate term, that Greece should just exit now.
I think it's more likely than not that Greece will go.
And do you think they should, in that sense, pay now?
It gets more difficult the longer it's left. The best time for Greece to go would have been as soon as this crisis broke. In fact, that's 2 years ago. We need to bear in mind we've been in this. And in fact, the fact that it's dragging on so long is one of the reasons that the British economy is struggling. It's worth bearing in mind, too, of course, that the Greeks cheated. The Greeks actually lied in their submission to the European Commission.
But the French and the Germans flouted budgetary rules as well.
About the state of their public finances. It's true that everybody broke the rules, but it's not true that everybody lied in accounting terms.
All right.
One country did lie, and in my view, action should have been considered at that point, which was quite early on.
But you are saying that really now would be better than later to see Greece exit.
Look at it from the Greeks' point of view. Do we really think that the Greek economy is going to be able to recover from here? Is it going to be able to make a sustained recovery at current exchange rates? Maybe that's possible. I think it's unlikely. If it doesn't happen, if I can just finish the answer to that point, it does mean extensive and enduring checks from the Germans to assist the Greeks. Whatever's done here is going to involve a lot of pain. Greece leaving is going to be very painful for us as well as for Greece.
We need to talk about the issues of contagion. But just before we get to that, let's look at the language from George Osborne and David Cameron. In that sense, why aren't we hearing a case being made by British politicians, all right, they may not want to shout from the sidelines, saying Greece should leave, it would be better for the British economy, if that's what they feel, because it seems David Cameron has entered into that territory. Was he right to do so?
Well, it's problematic for David Cameron and for George Osborne. We're not members of the Eurozone, but we are in the EU. It's not much fun for the Eurozone members getting what they consider to be, let me answer the point, they don't like hearing lectures from the sidelines from us, and David Cameron and the Chancellor don't want to get involved in that. On the other hand, we're trying to protect British interests, and we're trying to bring forward the point at which these decisions are taken. I mentioned earlier we've been at this for 2 years now. That's part of the problem, the fact that it's dragging on. And if I can make just one further point to that, It may be that we will stagger our way to a solution where eventually these cheques are written from the northern tier to keep the whole zone together, or it may be that parts of the Eurozone will fold or will fall away at the bottom, perhaps only Greece, perhaps others, I don't know. But whatever happens there, we must get that decision taken quickly, and that is why I have favoured and been arguing for some time that the IMF, the International Monetary Fund, come in not as a partner of the European Central Bank, but to tell the European Central Bank what to do, to tell the European Commission what to do, to act as they would with any other country in trouble and give some really tough, unsentimental advice to the rest of the Eurozone.
But in terms of what the leadership is saying, do you want to hear more from David Cameron saying, make that decision, break up if you're not prepared to stand by the currency, or get the European Central Bank to prop up, or have Germany at least instructing them to do so? Do you want to hear firmer language from our leadership here about what should happen?
Maybe he can leave it to me, you know. I mean, I think from his point of view, I can see that when he goes to that heads of state meeting that's coming just at the weekend, he doesn't want to have been giving them a long lecture. But I'm in a slightly different position. People like me can argue that Greece's position is pretty perilous.
Yes.
But to some extent, it's a no-win. It appears that a large chunk of the Greek population don't want to be in the Eurozone because of the adjustments they're having to make to deal with the pressures they're putting on them. It appears that a ton of money has been literally wasted that's already been given to Greece, which is appalling. But the knock-on effect, if either Greece, you know, are they going to be pushed or did they jump? And we're not quite sure which way round. And so we're getting complete uncertainty from the leaders, and we're not getting certainty from our own leader. And then what's the knock-on effect? And I think I take your position that if you don't cut the wound off soon, that wound is going to fester and spread everywhere, which is parlous to start with.
Can I just then come to that point of contagion? The risk of contagion, as Vince Cable set out very clearly, is also quite frightening. Is that not worse, the risk that you see Greece default messily or not, and then, of course, depositors start taking money out of Spanish and Italian banks, for instance, and then British banks look much more vulnerable in their exposure to debt there? That would be... Wouldn't that be far more frightening than actually trying to keep up propping up Greece?
Correct, and I largely agree with what's just been said as well. A disorderly breakup of the Eurozone would be catastrophic for anybody who is anywhere near the Eurozone at the time that happens. Yeah. The question is, can we find a way of making these adjustments either in the Eurozone or with these countries leaving, with the key country at the moment leaving, Greece,
I mean,
as soon as possible?
To some extent, it'll be a plus if I just jump in. Because obviously the money that would have gone to Greece can now be spread around the other countries if they so need it.
I just want to complete the point I wanted to make. I said a second ago that I think we need to be involving the IMF in all this. Are the Europeans, is the Eurozone planning a contingency operation for Greek withdrawal? I don't see enough evidence of that. I don't see the work being done.
Surely it is going on behind the scenes.
Well, I very much hope so. But the people who need to be doing that work and who should be doing that work and who are best placed to guide it are the International Monetary Fund. Get them involved now, empower them. 3/4 of their shareholders are not in the Eurozone, and it's on their behalf. That's us, that's America, that's Japan, that's China, India. It's on behalf of the rest of the world that we need them to do that job.
I'm going to have to